All right, good morning. It's day 168, and I want to talk about the Palantir earnings from last night. And basically, that there was a signal before the market priced it in from the earnings call last night. Now, right now, I'm long Palantir, and yesterday's earnings call explained clearly to me why, but not for the reasons that most people are talking about today in terms of the analyst notes. This quarter wasn't about revenue, and it wasn't about margins, and it wasn't even about the guidance, although they did clear $1 billion above what consensus was for the guidance. So what it was about was that who is now doing the persuading for Palantir. So here was the shift that I heard on the call last night. In earlier Palantir calls, it was management that spent a lot of time explaining why they were going to be inevitable, why AIP mattered, why customers would eventually need AIP. But in last night's earnings call, what was different is that persuasion was gone. So instead, what management reported was what customers were already saying to them. So there was a lot of time spent on the call where customers weren't asking whether to use Palantir or not. They were saying that other software now has to justify its existence against Palantir, and that's a power transfer. And it's the most important for great companies in their development, in their life. So here's the practical lesson that you can use out of any earnings call. So you got to listen for when persuasion disappears. You don't want to hear strong demand, record pipeline, exciting opportunities is another phrase you often hear. And when management stops explaining why and just starts reporting the facts, that's a few, those are the tells from those kinds of calls. So you want to hear that deals didn't crawl through pilots, boot camps, like at Palantir, went from boot camps to $80 to $90 million contracts in a few weeks. There were no pricing debates. There was no proof of value kind of language in the calls. You want to deployment speed gets replaced the sales pitch itself. So you're not selling something happening. It's about how quickly the customer's deployed. That's what you heard on the call with Palantir last night. That tells you that the sale isn't convincing somebody to try. It's deciding how fast they can roll it out. And that's called end state behavior. So when a product stops being framed as a platform and starts being treated as the default decision layer, that you're no longer competing inside a category. You're erasing the competition. And that's the kind of thing that you don't catch in a spreadsheet or in a press release. It only comes through the earnings call. You listen to how the language changes, who's asserting the inevitability, and where the persuasion quietly disappears. The market always prices this in after it's obvious. But listening, you can hear it coming. And that's what mattered on this call last night. That's why I'm long the stock.